Good morning. It's the Ambassador. This is a special New Year's edition of 2010 preview. Some thoughts to address the 2010 investment year and emerging, and a quick look back. 2009 was an extraordinary year when you consider the absolute returns of emerging markets off the lows. You're talking about north of 95% in index terms and currency terms, over 100 and 110% across the core markets. 73% in net terms from year over year, and when you consider the currency moves, again, north of 90% for the MSCI EM. Over a 3 to 5 year period, as you look back over the last three, actually on a compounded average growth rate, the return is only about 2%. Over 5 years, it's closer to 20%, which is a very impressive return. But when you consider the growth you're getting in these markets, the question is, what does it mean looking forward? It bodes very positively for returns over the next few years, where I believe the growth in emerging in real terms will be as good as we've seen. In other words, companies have grown remarkably off of a very low base, but with higher cost base and unpredictability to their businesses. That's going to change. The big trades in 2009, which were a weaker dollar trade, which led to moving out the risk curve, and historically what had been the reaction, which is to reach for commodities and hard assets, was a big part of the return profile. That won't be the same in 2010. What there will be is a world where I believe the dollar can continue to move sideways, even trade and trend slightly higher, and you can see commodities begin to push even higher from the current levels based upon true demand. Some of the conditions that were at the peak of the markets in 2007, which are supply disruption, but I'm talking about oil, I'm talking about nickel, I'm talking about copper, and I'm talking about some of the bulks, especially in the ag space. Still believe we're going to see a recovery in fertilizer prices, still believe we're going to see a huge recovery in grains prices. The economic impact of the world's food shortage will drive these main bulk products higher. Earnings and the economic recovery have lagged over the last 3 months. We expect emerging market earnings in 2010 to be north of 35%. There are markets that should be even higher than that. South Africa will be outperforming. Expecting Russia to be outperforming. Brazil is going to have a tough bar to clear. But the cyclical sectors that have outperformed in the last year will be places that you can still make money in 2010. Most notably, though, that the consumer in emerging is not dead. They were, I think, silenced somewhat in 2009 by the obvious global headwinds, but you still have an under-leveraged consumer. You still have credit growth in places like Brazil, where there really are credit mechanisms in place, probably growing 18 to 25%. Some of the key banks in Brazil are very well positioned for that. That in Turkey and South Africa, outside of possibly India, are the banking leaders in terms of credit mechanisms, in terms of advanced banks, in terms of infrastructure that actually support the growth of these banks. Those are some thoughts as we look back on 2009 and some thoughts looking forward to 2010. Stay tuned for more of these updates over the next few days as we all gear up for an exciting year ahead. I'm the Ambassador.